In this podcast episode, Mohnish Pabrai, who is referred to as the Indian Warren Buffett, shares his remarkable journey of transforming $1 million into over $1 billion. Pabrai delves into his early experiences as a businessman, drawing valuable lessons from his father, an entrepreneur. He recounts his involvement in his father's businesses from a young age, facing challenges and making tough decisions to keep the business afloat. This early exposure to entrepreneurship shaped his mindset and prepared him for future success. Pabrai emphasizes the importance of starting early and specializing in a particular field during the crucial developmental window of 11 to 20 years old. He highlights the significance of having a diverse range of experiences, including exposure to sales calls and business operations, which helped him develop a deep understanding of consumer behavior and branding. His transition from engineering to international marketing further honed his business acumen, allowing him to connect with customers and drive sales effectively. He stresses the value of thinking like an entrepreneur and understanding the big picture in business decisions. The podcast delves into Pabrai's investment philosophy, inspired by Warren Buffett and Charlie Munger. He shares insights on identifying undervalued assets and the power of compounding returns. His approach to investing revolves around seeking out opportunities in unloved and overlooked areas, similar to Buffett's strategy of focusing on undervalued companies. His success in investing is attributed to his ability to apply his entrepreneurial mindset to the world of finance. He emphasizes the importance of understanding consumer behavior, branding, and market dynamics in making investment decisions. Pabrai started his investing journey with $30,000 from his 401k and $70,000 in credit card limits. He worked on his business in the mornings and evenings while still holding a job to generate revenue and clients before resigning. He emphasizes the importance of minimizing risk in both entrepreneurship and investing, highlighting the similarities between the two. He shares the story of how a group of Patel refugees from Uganda who were expelled by dictator Idi Amin built a successful business empire in the U.S. by starting with small motels and gradually expanding into other ventures. Their frugality and focus on being low-cost producers allowed them to dominate the motel industry in America. Pabrai also talks about meeting Charlie Munger and Warren Buffett, which he describes as a surreal experience. He was inspired by Buffett's investment strategies and realized that investing was his true passion. He started managing money for friends as a hobby, which eventually grew into PAB funds. He adopted Buffett's fee structure of no management fees and only charging a performance fee, which resonated well with his investors. Despite SEC regulations limiting his ability to solicit funds, Pabrai leveraged annual meetings with existing investors to spread the word about his fund. He focused on delivering strong returns by shifting his investment strategy to classic Ben Graham deep value investing during the dot-com bubble, which led to significant success during the market downturn. Pabrai's contrarian approach paid off as he invested in undervalued basic businesses like funeral homes and steel companies, which were trading at low multiples. While the Nasdaq experienced a 75% drop, PAB funds thrived during this period, showcasing the effectiveness of his value investing strategy. He recounts how he won a charity lunch with Warren Buffett in 2007 and how that meeting led to a deep friendship with Buffett's business partner, Charlie Munger. He shares insights from his lunch with Buffett, including Buffett's advice on being a harsh grader of people and surrounding oneself with exceptional individuals. One of Pabrai's key investing philosophies is heads I win, tails I don't lose much, which emphasizes the importance of seeking asymmetric opportunities where the upside potential outweighs the downside risk. He gives examples from his own investing career, such as investing in a steel company that was trading at a significant discount to its intrinsic value. Pabrai discusses the benefits of investing in public markets over private markets, citing the liquidity and transparency of public auctions as factors that can lead to mispricings and opportunities for savvy investors. He also talks about the importance of patience in investing and how compounding can lead to significant wealth accumulation over time. When asked about whether people should buy index funds or actively invest, Pabrai recommends index funds for the majority of investors due to their low cost and broad diversification. He believes that actively investing should be reserved for those who have the talent and patience to identify undervalued opportunities and hold them for the long term. He shares a story from his time on CNBC where he refused to give stock tips on air, highlighting his commitment to not providing random investment advice. He believes that taking stock tips from TV personalities is not a wise strategy and that investors should focus on long-term compounding instead. Pabrai delves into the concept of circle the wagons philosophy, inspired by Warren Buffett's 2023 letter to shareholders, where Buffett highlighted that only 12 out of the hundreds of investment decisions he made over 58 years significantly impacted Berkshire Hathaway's success. Pabrai emphasizes the importance of the paint-drying decision rather than the initial buy decision, pointing out that holding on to great businesses for the long term is key to success in investing. The conversation shifts to discussing other notable capital allocators, such as Mark Zuckerberg of Meta and Elon Musk of Tesla. Pabrai praises Zuckerberg's transformation from a spendthrift to a more disciplined capital allocator, noting the positive impact on Meta's financial performance. He also commends Musk for his exceptional ability to allocate capital effectively across multiple ventures, including Tesla, SpaceX, and the Boring Company. When discussing Tesla, Pabrai acknowledges the complexity of analyzing the company due to its innovative nature and the challenges of valuing it. He admires Musk's visionary leadership and ability to disrupt industries, highlighting Tesla's success as a testament to Musk's exceptional capital allocation skills. The podcast concludes with a tribute to Pabrai's friend and mentor, Charlie Munger, who passed away recently. Pabrai reflects on Munger's selfless dedication to helping others and his relentless pursuit of usefulness in all aspects of life. He shares personal anecdotes about Munger's stoicism in the face of adversity, such as losing sight in one eye and facing potential blindness in the other, yet maintaining a positive and forward-thinking attitude.